Welcome back, traders. In today's market breakdown, we're starting with the dollar index as it hovers at a critical inflection point that could ripple across global assets. Then, we'll dive into Bitcoin's chart, where price action is hinting at either a breakout or a deceptive bull trap. Over in equities, the S&P 500 is pressing up against all-time highs, but is the momentum real or fading? We'll also analyze the NASDAQ 100 as tech stocks walk a fine line between euphoria and exhaustion. And finally, we're looking at gold, which is coiling tightly and could be gearing up for a major move. Stick around, these charts don't lie, and neither do we. Welcome to Rich Key's channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we. The stock market isn't gambling when you apply the science of statistics and probabilities, along with proven technical strategies. Get smart with technical wisdom for your financial journey. Subscribe and join us on this journey to wealth investing and trading the financial markets.
Disclaimer: not financial advice. The information provided on this channel is for informational and demonstration purposes only, and should not be considered as personalized financial, investment, or trading advice. Risk warning: all investments carry risks, including loss of principal. Do your own diligence. You should conduct your own research and consult with a qualified financial professional before making any investment or trading decisions. No liability assumed. We are not responsible for any financial losses or damages that may result from your use of the information presented.
Good morning, everybody. Today is Saturday, July the 5th, 2025. Time now is about 6:50 a.m. New York time. And I've done my weekly analysis and just want to share my perspective on the market. The assets that I'll be covering would be the dollar index, Bitcoin, and we'll also look at XPX, NASDAQ 100, as well as gold. Please know that this is, again, not financial advice. I'm just sharing my perspectives and how I see things in the coming week. But let's look at the dollar index, starting from the weekly perspective. Now, on the weekly chart, we do have a form of a reversal candle formed. With this long tail candle, it tells me that buyers have stepped in strongly after a huge sell-off from last week. And I'm also observing a few divergences on this candle. There's an RSI divergence on this, as well as a money flow index divergence and onboard volume divergence. When you step down to the daily chart, it looks more interesting, where you could actually see this an inverted hammer that reversed the move down, and the bulls have pushed higher. Now, this is an inside bar with a bullish shadow, and I expect that the bulls will probably continue to move price up in the coming week. My target wise for the dollar index is somewhere around 97,223. I also want to project that the current level where the dollar is also supporting that it moves a little bit up, because if you step down to the monthly, and I shared this my last video, that this is a monthly trend line that goes all the way back to somewhere around 2021, came to find support on this trend line, as well as in 2014. It has such a strong support trend line on the monthly, and we're right about there. If you look at it from this perspective, we right there or thereabout. So the low on the dollar index was 2011 on the monthly time frame, where we made a higher low from a previous low from 2008. And in 2011, we came to make a higher low, and with this higher low, this began a nice monthly uptrend, and this has been the trend line from 2014 to 2021, and it's 2025, and we've come to it. So I'm not expecting the dollar index to cross this monthly trend line easily without a pullback up first. So this is where my idea is originating from. And as I step down to lower time frame, as I shared with you, I expect the dollar index to make it up to about 97,223 in the coming week. The next asset I like to look at is Bitcoin, and Bitcoin is of much interest. It's a very hot asset. and I love the price action on Bitcoin. So here's a monthly perspective from for me on Bitcoin. We had a rally from 2020, thereabout, to 2021, had a pullback, had a double top, sharp pullback, and we have rallied since 2022, November, December, thereabout of 2022. And this rally on the monthly time frame is still intact. I was sharing this with a comment on one of my profiles that yes, if you're looking at it from the monthly perspective, Bitcoin is still in a strong bullish rally, and we don't have any reversal candlesticks on the monthly yet. Okay, so on a monthly perspective, the only thing that is missing on this monthly chart is the volume. The volume have been declining. In previous rallies, as we were inching up, the volumes were rising. You could look here from the rally from 2020. Look at this volume profile here. All right. Volumes were up, 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 up. And then when it started coming down, we had a rejection, reversal candlestick on the monthly. We don't have a reversal on the monthly yet. So I'm not calling for doom on Bitcoin. Okay. I'm just saying there is weakness in the rally where we are now. And I'm seeing a few things that could potentially say that we might be pulling back, not necessarily reversing until I see a reversal candlestick on the monthly. Also, the other thing noting on the monthly is that before any major reversal on the monthly, we usually do go outside the KC band, as well as sometimes even the Bollinger Band. Here we did go after outside the KC band and the Bollinger Band before coming into a retrace, a stronger retrace. Likewise, in 2024, we're outside the KC band as well as the Bollinger Band, and we had a nice retrace all the way down to 50,500 and something. And then we started this rally up. We went outside the KC band as well as the Bollinger Band with a shooting star. Okay, and this brought us down to right about 76. Now we have gone from 76 all the way up to about 112. Okay, we don't have a rejection of candle outside the KC band. We also don't have price outside the KC band at the moment. We just have a major barrier that we're struggling to cross. Again, why we struggling to cross this barrier is the volume. Okay, the volume. There was an article that I read over the week, that the whales are selling, especially those that bought Bitcoin around $10,000, $15,000, and they are selling, whilst the institutions are buying. Institutions and Michael Saylor are buying. So they probably absorbing the selling. And so prices are basically, as I've always said over the last couple of weeks, that Bitcoin is probably going sideways. And who knows how long we're going to stay in a sideways channel. And the sideways channel is a boundary between somewhere around the 112 and somewhere around 97,000. This is the 9 uh, period moving average on the monthly chart. So I expect Bitcoin to play within this price zone for a while. And at some point, a decision will be made between bears and bulls, and we'll be able to make a strong case where our direction is. So in the meantime, whilst we cannot project anything on the monthly, whether we're going to break this barrier or not, for us to break this barrier, I need to see some strength come into the market. And as I look at the RSI is not showing any strength. This is our previous high. We pulled back. We made a lower high on RSI. We pulled back, and we have made another lower high on RSI. Now, of course, the month is not completed, so I cannot conclude that this cannot make its way up somewhere to the 90s on my RSI indicator. you know but that barrier holds, then it means this RSI is not going anywhere, and that would create another divergence between here and here, and that's a bearish divergence, and that potentially could put Bitcoin back down. So from a higher perspective, let's put that at the back of our minds. Now let's step down to what we can trade, which is the daily, the weekly, the 4 hours, the hourly. And when I look at the weekly setup on my Bitcoin chart, I have a lot of annotations on here. So we do have a divergence right here from the weekly between the high that we closed around December 2024, okay, to the new high that we made, which was somewhere around, the close was around 109. Okay, there was a MACD divergence, RSI divergence, momentum divergence, money flow divergence, all on this chart that pushed us back down. And then we managed to pull up last week with a strong bullish candle. And as I was saying, with this candlestick that we formed, we're likely to push a little bit high. Anyone that visits my last week video would have realized that I did say we would go above somewhere to the 109, 112 zone, based on this candlestick, and we just hit the exact same barrier. Problem is that this barrier has been rejected three times at least. Okay, so we poked through it the first time to 112, attempted one, two, and this is the third attempt that is failing. Now, of course, the week is not closed, and I can't conclude on this candlestick yet. But looking at lower time frames, I think this candle is going to close probably in a red, either a doji or a small body red candlestick. And if we do close like that, that means this three rejection of value is cemented, and potentially we could be pulling back down. My near-term target for Bitcoin, if that should occur, is somewhere around the 21 period moving average on the weekly to somewhere around 97,000, which is a support zone. When we step down to the daily chart, things get a little clearer. So on the daily chart, this is the bootstrap that I was looking at last Thursday into Friday. And it has pushed us back down. Now, if today being a Saturday, okay, if this candle here that we are currently on closes red, then it cements the call that those that bought around 109, 110. Now I really feel sorry for anyone that bought around 110. You might be holding for a little while. Doesn't mean Bitcoin cannot go break that barrier. I'm not saying that. I'm just saying, you might be sitting for a little while as price makes its way back down into the triangle, and may consolidate within this triangle for a while. For how long, I cannot promise. But again, I wanted to show that the barrier is intact. And there's also some RSI divergences also on this chart that I'm also looking at. So as I iterated, my near-term target for Bitcoin, it's sideways. Potentially, we might pull back down into somewhere the lower ranges. And if it gathers enough selling strength, then yes, the near-term target is around 97,000 200 and no 97,021, or somewhere around the weekly 21 period moving average. So I think I spent enough time on Bitcoin this week, and we shall continue on the other pairs. I will briefly touch on the XPX next, and starting out on the daily time frame. We shall look at the weekly as well, but I want to start on the daily because the daily is giving us a little bit of a more near-term perspective than the weekly. So XPS is forming also some form of a divergence between this price zone that occurred around May 13th, 14th, all the way here. And we had a pullback, and we have been grinding higher. The thing is, our call for last week was right on spot. This is a fib extension that I put on here, 6,265, and we went right to it. So right from the breakout of the new high. Now this fib extension, we're seeing a reaction. We're beginning to see some pullback from this reaction, and it's obvious. Anytime people measure these levels and we get there, more likely price is likely to retrace from there. The next thing I do see on XPS is that this divergence that is occurring between this price zone and this price zone are very identical. Now you realize that when we went outside the KC channel for how many days? 1, 2, 3, 4, 5, 6. For about a week, we were outside the KC band, and we did had a nice correction into the 21 period moving average. We consolidated here. We had a nice push up, breaking into new all-time high. But again, we are also about 1, 2, 3, 4, 5, about 6 candles outside the KC band. And we are having a red candle right after that, similar to what happened here. Based on just these two patterns, plus the divergence that I'm noting on the daily, even without looking at all the other stuff, I could say that potentially XPX is likely going to pull back into the band. Probably, I would say a target zone either to the 21 moving average on the daily chart, or a deeper pullback could bring us to about 6,040 as a near-term pullback. And when I step down to the weekly, I'm also noting a weekly divergence in play. Only thing is that the weekly ended with a bullish candlestick, or a green, a bullish candlestick is a green candlestick. Okay, so bulls were still in control on the weekly perspective. However, there's also divergences also noted on this weekly candlestick. The one good thing is that MACD is still strong on the weekly. You look at MACD here. Nothing on the weekly on MACD tells you that the move up is over. So I'm just saying a potential pullback on the daily may reflect on the weekly by the end of next week, but I cannot say that for now based on my weekly setup. Everything on the weekly is looking bullish. There's one thing that I would note on the weekly chart, okay, and I've said this right from the beginning of the rally, is the volume profile right here. Look at this volume profile right here. It's not been strong. Um, we've been declining and declining ever since. Okay, and we have been pushing up and up and up and up. It tells me that the move up may not be supported strongly until we see volume coming. So that's my take on XPX. Yeah, I wouldn't spend too much time on the Nasdaq, as the picture is much similar to what the XPX is doing. However, I do see that the Nasdaq is in a stronger position than the XPS, as the volumes on the Nasdaq is relatively reasonable considering the price moves. So maybe I would say that Nasdaq still has potential, as we haven't still hit our target on Nasdaq, which is 23,384. That's a fib extension of 0.18 on the Nasdaq. On the daily chart, the picture is, as I said, is very similar to the XPX. We've gone outside, not significantly, but quite outside the KC band. Also, kind of two standard deviations from the mean, which is the 21 period average, or the 20 moving average, whichever one you use. I use the 21. Um, and there is some divergence spotted also on the daily chart. There's a MACD divergence. There's also a histogram, MACD histogram divergence, as well as an RSI divergence, all on this chart. And we have already printed a red candle on Friday, July. I think this was on Friday. Yeah. No, actually, yeah, this was on Friday. Yeah. So market was closed. I don't know. Anyway, that was the previous closing candle that we had. And yeah, looking at this, I'm looking at my RSI chart. You went higher, pull back, and now you created a lower RSI. Besides this RSI high, and this RSI high is the divergence that I'm talking about on the chart. So, okay, so this is it right here and here. So that's a divergence on it. And if you look at MACD is also showing the same. That's your previous high. You pull back, and now you printed this MACD high here. That's the divergence that I was pointing out to. So I expect Nasdaq to also do a healthy pullback. Probably near-term target, it's somewhere around either to this all-time high level, but I think we'll probably make it all the way to the 21, or probably 22,000 level. Somewhere around right here will be my target for the Nasdaq pullback. Now, finally, I'd like to touch on gold. And I said last week that gold has respected the 50 period moving average on the daily chart since the uptrend that began. And last week, I was concerned that if we are not able to reclaim the 50 period moving average in the coming week, then yes, gold was in trouble. But good news, gold was able to reclaim the 50 period moving average and is still trending sideways. And I think gold will probably go sideways a little bit more before it makes its next move up. Um, Currently, I think gold probably would try and make a move up in the next coming week. Um, just based on a few indicators that I'm watching, and particularly the MACD. So after the pullback, you could see that MACD histogram bars are getting thinner and thinner, or shorter and shorter, as one would say. As MACD is moving up, but price is going sideways, it tells me that momentum is building up and potentially gold could be going back up. Not yet confirmed until we go above the zero line on the MACD histogram bars. RSI has also kind of moved into a healthy zone on the daily chart. This is where RSI came all the way well into the oversold level, and we are bounced now above the 50% level. So RSI above 40 is usually considered to me as um, a reversal. If you go all the way down to 18 and you make it all the way back above 50, pull back and you're right around the 50 mark range, it tells me that there's strength coming back into gold, and I think gold will potentially make a move up in the near term, probably to a target of 3,441. The only thing is that we have a cycle high here on the daily chart after we printed this red candle on July 3rd. So potentially we could go sideways, even probably pull back down to the 50 period average again. But I think based on the weekly setup, considering that we closed the weekly in a green candle, a green healthy volume, I think the price on gold probably could hold, and we'll probably just grind in between this consolidation zone until we break out into a new high. So I think I've expended all my time. It's 20 minutes and I'm done. Thanks for your time. Have a great trading week, everybody. Cheers.